Take a look at your market news now. Asian shares snapped near multi-month peaks this morning, while bonds eked out a bounce as reports emerged of delays in a preliminary China-US trade deal. It's left investors frustrated at the lack of concrete progress. Japan's Nikkei dithered either side of flat in very quiet trade, having touched a 13-month top on Wednesday. A meeting between US President Donald Trump and Chinese President Xi Jinping to sign an interim trade deal could be delayed until December as the discussions continue over terms and venue. The Nikkei in Japan was up 0.1% to 23,330 points, while the Hang Seng gained 0.75% to 27,891 points. The Shanghai Composite was marginally lower to close at 2,977 points. Let's go to the United States now, where stocks ended little changed last night, as a report that US-China trade deal could be delayed until December was offset by gains in the healthcare shares. The Dow Jones Industrial Average was mostly flat at 27,491 points, while the S&P 500 gained 0.07% to close at 3,076 points. The Nasdaq Composite dropped 0.3% to 8,410 points. Let's get some more on the markets now. We cross to Arabile Gumete, who's standing by the Johannesburg Stock Exchange. Very good afternoon to you, Arabile. What's moving the market this afternoon?
Yeah, good afternoon, Nzinga. Well, it does seem to be the China-US trade situation, and that scenario just doesn't seem to be coming right. So another delay, of course, Chile not necessarily being able to host that summit, so perhaps finding a new venue for where the agreement will perhaps be put in place. Even if it is just phase one or an interim trade deal, that certainly seems to be the case in point right now. So perhaps London might be the new venue, and considering how far things are going along when it comes to Brexit, there aren't necessarily any members of Parliament in London or Britain anymore, considering because they're headed off to elections very soon, and they've already entered their election cycle. So things are getting a little bit more interesting on that front too. Where exactly that trade deal perhaps goes is going to be quite interesting, and we'll get to unpack and talk about that a little bit more in detail as well. The local market, not so much of a positive sentiment today, perhaps slightly down, and that is based on a bit of a muted response out of the United States yesterday, which has halted from its record levels, as well as in Asia as well, as you noted there as well. 2 out of the 3 main indices out in Asia headed higher, although that was only marginal. So how exactly does Europe fare? Well, let's take a look at the numbers and we'll unpack it all in just a bit. Well, as you can tell then, the Rand doing fairly better there, 14.72 odd against the US dollar, so perhaps a slightly better picture on that front. Let's unpack exactly what's going on in this market picture. We do have some news as well out of the manufacturing sector in South Africa. That goes down 2.4% for the month of September year on year, and the only sector to have gone up within the manufacturing segment has been food and beverages then. So certainly negativity reigning in, and this is hurtful then to South Africa's growth projections. Viv Govender from Rand Swiss, thank you so much for the time. It's a negative picture when you see manufacturing come out at 2.4%. This is almost 12% of South Africa's GDP. And for, yes, it is only 1 month, but it does hurt the broader picture.
I think the previous month is also down about 1.8% year on year. So it is that a great picture. And here's the thing that I always think that you need to understand is that all the countries that we want to emulate, every country that has gone from being poor to being middle income or being wealthy, has done it through one methodology, and that's through manufacturing, in a short period of time. Of course, there's some countries that have done it much over a long period of time, over centuries and so on. But the countries that have done it like in, say, 30 or 40 years, the South Koreas, the Chinas, the Taiwans, the Japans, I can name them, a number of them, these Asian tigers, have been through manufacturing. And the reason is quite simple. One of the things manufacturing does is it basically takes up a lot of labor. So even people that don't have a lot of skills, academic skills, can be taught how to weld, how to build things, how to assemble things with their hands. And the second thing it does is that it allows you to step up to next levels. So for instance, tourism doesn't actually basically progress. The more tourism you do, you don't get so much better tourism. But you start building toy cars, eventually you start building real cars. You start building like phones, you start building more high-tech items and so on. And that is something I think that is really important. Our manufacturing sector is probably our best hope to get proper development in South Africa.
Yeah, so looking at it going down 2.4%, that doesn't help us any one bit, but we are getting some form of investments coming into the country. Yes, perhaps helping some of the secondary and tertiary parts of our economy. Do you think we have the legs to carry this on? And what I mean by that is, are we able to perhaps get things going ultimately? Because that's what we need now. Yes, you can get the investment, but whether you get it in future as well is going to be dependent on whether implementation of any of these projects comes to the fore.
Yeah, look, the investment stuff, I think a lot of the stuff is basically, it's announced at the time of the investment summit. So a lot of stuff was planned anyway. A lot of stuff was done by things like Discovery and so on. They were planning to do it anyway with that bank. The second part to understand is that, we already had 1 year of this investment coming in, and unemployment rate hit, new all-time highs effectively. So it really hasn't affected employment at the level we wanted to affect it. And finally, here's the thing. If Eskom is struggling to basically supply electricity to a country growing at less than 1% a year, how is it going to supply electricity to a country that grows at 5% a year? Electricity is basically essential for all forms of economic development. And so the more you grow, the more electricity you will need. And the country can't even supply what it needs to if it's not growing at all.
Yeah, and speaking of that Eskom picture, Anglo American naming it as perhaps their biggest risk, Mark Kutufani saying that it is indeed their probably their most single biggest risk to their business. And this is despite them looking to plow almost 30 billion rand into a diamond operation out in Limpopo as well. So how do companies then begin to navigate in and around South Africa, knowing that you could have load shedding at almost any point as well?
Now, what you can understand is that there is opportunity in South Africa. That's why people want to invest here. So almost any country in the world, you can find the worst country in terms of all the fundamentals, and there'll be still opportunities out there because this is the best opportunities. What we need is to have the second best and the third best and the marginal opportunities also be, coming to play. And that's how you get economic growth. Every country has something going on, but it's when you have to have real growth, you have to have exploit as much as you can from those potentials. And that's the problem right now. It's not the obvious deals like this big mine and so on. What you want to do is the marginal deal, the deal that was just one way or the other way depending on how things are going, and that's the deal which will add extra jobs to the country, will add extra productivity and so on. So I think we need to see more of that happening, more of the marginal deals happening, because those are the deals that we need to actually grow the economy.
Yeah. All right. Well, let's take a look at the market in general then. A lot of it is still hurt by what happens out in China and the United States. No real trade deal set in stone yet. Yes, they're perhaps holding back on a few more tariffs and whatnot, but now it's about signing phase 1 of that trade deal. Now it's going to get delayed by the looks of it to December. Yeah,
and that's such a sad thing. It was the Chilean, fare rise, literally an increase in transit prices in Chile by like a few cents, caused massive riots, caused the Chilean government to cancel a thing that caused the Chinese and American leaders not to meet and have a deal signed, and now it's been postponed by a little longer. It's one of these weird things, But yeah, look, I think right now we are seeing Trump, he suffered some big electoral defeats over the last couple of days. There were 3 big statewide elections happening in the US. He lost one governorship. He lost, or the Republicans lost the governorship. The Republicans also lost, I think it was the Virginia State Senate, which basically went Democratic. And that indicates the governorship he lost was Kentucky. And Kentucky, I think had won himself by about 30 points. It was one of the most deeply red states in the US. And in that state, the Republican governor was defeated by a Democrat. So it may indicate that he's in very, very choppy waters next year. And that could be something that I think makes him want to have a strong economy. And that might be pushing him more towards having a deal done.
And considering that he had actually gone into Kentucky predominantly the night before and said to them, don't make me lose, just make me look bad, right? Making that election really about him. But considering the impeachment progress as well behind that's kind of happening, I think he's really, really suffering quite a bit as well. But that market, the Wall Street that is, has just kept on rising to record highs. Yes, fine, we now saw a slight pause yesterday, but that's gone really good, and some earnings numbers have certainly been much better than analysts had expected as well.
Yeah, I know. Look, we are seeing earnings doing reasonably well in the US. We are seeing the US basically the system doing quite strongly. But one thing interesting I didn't see is that now we're starting to see a bit of a pushback against the Democrats. Even people that are as progressive as Bill Gates have come out and said, no, you tax me 10 billion, I might be fine. 20 billion, I might be okay with. You tax 100 billion of my wealth, then I'm going to think twice about things. And actually, that's the case of what's happening right now. Because you look at what the more progressive, and these are the guys that are leading the Democratic debate in the US at the moment, people like Elizabeth Warren, they want to tax 6% of wealth of billionaires. So basically, if you're a billionaire, your investments have to do 6% in hard currency terms just to break even each year. And that's not, no, actually more than that, because probably 7.5%, because they're also going to tax you capital gains and then tax you the wealth after that. So we're talking about a 7.5% return on your investment before you even start breaking even. So that's a huge amount of pushback coming through. So I do think that we are going to see more and more choppiness coming to the US markets next year as we get closer to the election date. I've been telling people for a while now, if Donald Trump does not win next year, expect markets to do very badly.
Sure. Bit of a weird one in that scenario, because one would have hoped that if Donald Trump doesn't win, it would set some positive sentiments out. But nonetheless, Viv, thank you so much for the time. Really appreciate it. 18.93 then for a pound, 14.72 odd for a dollar, and a euro is at 16.31. So some positivity there for the local currency, having pulled back from around 14.83 against the US dollar. That was Viv Governor from Rand Swiss, then helping us unpack that market movement as well across the day. Where do things end? Well, we'll certainly see it at 5 o'clock as well today. Of course, a whole lot still expected when it comes to that China-US trade deal. When do they sign? When does Brexit come to an end? All of that will be unpacked right here on Point. For now,